Uh, Guys, just 1 minute. We'll start off with it. So let's start. Morning, guys. Uh, yeah, my voice only. So yeah. So let's start the chapter called Final Accounts. Now, when we are looking into the final accounts, right? Let's just go back to certain basics that we have learned in chapter one. What do we do as accounting? We start off with recording, that's journal entry. After journal entry, we prepare our ledger accounts. Now, ledger accounts goes to trial balance. What is a trial balance? Statement of, which is a statement which gives me a summary of all the ledger accounts, right? Now, when we are looking into the ledger summary, first thing in a trial balance, my rule number one that we need to follow is, see here, what's the format of the ledger account? Sorry, trial balance. Particulars, debit, credit, right? Now, if you remember what I had told in the beginning, what all does a trial balance have on the debit side? Assets and expenses. For our simplicity, let's give some numbers. And whatever I'm teaching you guys today in the first 10 minutes, if you really understand it, trust me, never in your life your balance sheet will mismatch. What I'm teaching you now, please apply this rule, because see, now what will change from here is, I'm telling you assets. There'll be list of assets. Expenses, there'll be list of expenses. So let's give some numbers for assets. Let's assume 10,000. Expenses 5,000. What all will be on the credit side? Let's say income 7,000. Then liability is 4,000. Then capital. Capital will be what? 7, 11. Let's assume another 4,000. Does this tally? Morning, Chandana. Morning, Sabri. Are you guys clear with this? Now, what we need to understand is, if you remember chapter number 1, we did, with the help of trial balance, I prepare my financial statements. So I am here now. What? I am at my trial balance. Now I need to prepare my financial statements. If you remember, I told you there are 3 statements, but for foundation we have 2. Which are the 2 financial statements that we have? Income statement, and the second statement is my balance sheet. Let's try to understand what's an income statement. To understand income statement, we'll have to go to 2 concepts. One is the accounting period. Second one is the matching concept. What does the accounting period say? My entire business is a going concern. I need to divide it into some equal intervals called as my accounting period. Yes or no? The second part of it, what does the matching concept say? All the income earned in a particular accounting period has to be matched with the expenses incurred to earn that revenue to figure out the profit or loss. Again, for an accounting period, whatever income I have earned, I have to match with the expenses incurred to earn that revenue, expenses incurred in that period to find out what? Profit and loss. Basically, in layman term, what income you have earned, what expenses you have incurred in that particular period only, match it, that becomes your profit. Now, so with the help of trial balance, I prepare one statement called as statement of profit or loss, income and expenditure account. The second statement I prepare is my balance sheet. The second statement I prepare is what? Balance sheet. Are you guys clear? Now, what is a balance sheet? What's a balance sheet? Correct, Martel. On a particular date, what is my asset and my liability, so that my assets minus liability becomes my net worth. So I'm trying to find on a particular date. Are you guys clear with both? Morning, David. Now, what are we going to be doing it? This trial balance, I'm going to be first classifying. Let's say for an example, I'll write it as expenses here, income here, liabilities here, assets here. This is not a format, just I'm trying to say how the matching will work. Now, see here, where is assets written? So I'll write here 10,000. Where is expense written? 5,000. Where is income? What is my liability? Capital. Now, step number 1 in any financial accounts is I need to classify my trial balance. What I need to classify? Trial balance I need to classify my trial balance into 4 items: assets, liabilities, income, and expenditure. One sec. Yeah. So I have to classify my trial balance into what? Assets, liabilities, income, and expenses. Once I do that, I need to classify into 2 statements, like a statement number 1 and a statement number 2. Are you clear? This is a blind rule I'm going to follow throughout my CA journey. Not I'm talking for foundation exams and other part of it. Throughout your journey, because when you guys go for your articleship, typically what happens is a client sends you a trial balance. What does the client send you? Trial balance. I need to prepare these 2, and this is how I go about preparing it. Are you clear? Now, this is plain vanilla without any adjustment. Now, what is my income over expenditure? What is my income over expenditure? No, right now, amount. 2,000. This we call it as my profit, right? Profit belongs to whom? Is it an asset to a company or a liability to the business? Liability. Why? Which concept? Business entity concept. Business entity concept says that the profit earned by the business is the reward to the owner. So we need to give it as a liability, right? So I'll write profit here. Look into it. Profit 2,000. Does this tally now? 10,000. That's all is a financial statement. We learn so many things here, there, and all. This is all is a financial statement. This is like a skeleton. Now from here, we are going to be developing it. Till here, did you guys understand? Sabreen, Chandana, Joel, Fatima, are you guys clear? Morning, Aishwarya. Superb. You want to write this down? No, right? Understood basics. Now let's come to the second part of it. Now, what do you mean? What's a rule of double entry? Concept. Dual accounting concept. What does dual accounting concept say? Debit is equal to credit. I am looking one step ahead. Okay. Every transaction would always have a debit or a credit. If any transaction or any item is appearing in the trial balance, listen to it. If any item is appearing in the trial balance, that means that a debit and credit is recorded. Remember again thumb rule. If any item is appearing in the trial balance, what does it mean? There is already a debit and a credit done. If any items are given outside the trial balance, if any items are given, that means they have not been recorded anywhere. They have not been recorded anywhere. Any item which is recorded, not recorded, if I have to bring it, like Amulya said, we need to do a debit and a credit. Now let's try to just understand this. Closing stock will always appear outside the trial balance. Closing balance will always appear what? Now, did I finish my trial balance entry? Now, when I did this, have I not recorded everything in the trial balance? When I did this portion, have I not recorded everything in the trial balance to financial statements? Now, I'm telling you closing stock is 5,000 rupees. Closing stock is what? Now, this is where your accounting becomes little trickier if you don't understand the concept. Rule of accounting is what? For anything not appearing in the trial balance, I should be recording it twice. Thumb rule. Anything outside the trial balance should always be recorded twice. One debit, one credit. One debit, one credit. Are you guys clear with this? Now, let's go back to the dual accounting concept. What does say? What all can be a debit? An asset increase, Fatima, you need to check the journal entries chapter. I can't teach what's a double entry now. Uh, what all is a debit? An asset increase, then expenses, then liability decrease. Okay, income decrease, right? Now, what all can be a credit? Liability increase, income, then capital, right? Then I can say drawings, then what else? Asset decrease, expenses decrease. Now, anything which is an adjustment, I will try to just fit into one debit and one credit. Anything which is a adjustment, I will try to fit in what? One debit and one credit. This, if I can apply it properly for adjustments, my balance sheet will always tally. Let's say for an example, let me take the closing stock. Closing stock. Is closing stock an asset? Can an item be both an asset and a liability? So this cannot be. Can it be a capital? No. Is it an asset decrease? No. But can it be an expense decrease? No. So the only option left is it should be written somewhere on the income side. It should be written something on the income side, right? Now just look into it. I'll write closing stock 5,000 here and I'll write it in the assets 5,000. Is this income? Is it a credit? Asset, is it a debit? Now see, my trial balance and balance sheet will match because I have always given two adjustments. So remember this thumb rules, whatever I've told you. From here we'll start developing it. What's the thumb rule number one? Everything in the trial balance would have already appeared. Therefore, it will appear only once in my financial statements. And items in the trial balance can only be what? Assets, liabilities, income, or an expense. Are you clear? Write this down. Guys, write down the notes. All the items in the trial balance, all the items in the trial balance, since there is a since there is a double entry already done, since there is a double entry already done, it will appear once in financial statements. It will appear once in financial statements. I want you to write this down just for an part of it. How do we write it as? We'll try to make it as 0, 0, everything. So we'll call it as X, X, Y, Y, Y. Copy this. X, X, Y, Y, Y. Right? Now write down your, from here, copy this down. So your expenses, income, liabilities, assets will come this side, capital. Done, right? Are you guys done? Now let's come back one by one. Did we stop? What did we last write? The statement, right? Write down next one. Any item or adjustment, any item or adjustment, any item or adjustment which is outside the trial balance, which is outside the trial balance, which is outside the trial balance, should appear twice in the financial statements. Should appear twice in the financial statements. So this you write it, this table what we have written. So anytime any adjustment comes, right, we'll try to fit into this part of it. Guys, are you clear? The ones who are attending online and other part of it, you can always use the study material, ICA study material. So we'll be doing only through ICA study material. So Morning, Vikshit. Vikshit. Till here, are you guys fine? Now let's just try to read certain theory portion and then we'll try to look into it. Now, what we are going to be doing is we are going to be talking today about our financial statements of a non-manufacturing entity. When I'm saying non-manufacturing entity, we are talking of companies which are into trading. Which are into what? Trading. What does a trading company do? Buy and sell goods. So they don't incur too much of expenses to convert raw material into finished products. So I would have purchased goods and I'm selling it. Clear? Now, in a financial statements, I said we prepare two statements. One called my income statement. The second one is called as my balance sheet. What does an income statement talk about? An income statement talks about the performance of a business. What does an income statement talk about? For a particular period of time. And my balance sheet talks about the financial position of a business, that is my assets and liabilities on a particular date. Clear with this? Are you guys all clear? The next part of it is with regards to your income statement. Now, in income statement, we try to do two other statements. We'll try to break our income statement into what? Two more statements. One called as trading account, the other one called as profit and loss account. The income statement is divided into how many more pieces? Two. One, trading account. The second one is called as my... Okay, what does a trading account talk about? What does a trading account talk about? Morning, Divakar. Yeah, what does the trading account talk about? See here, a trading account talks about what is my income and what are the direct expenses incurred to earn that income. Listen to it. What is my regular source of income? Let's say I'm a doctor. What is my main income? By treating patients, right? I also make money through stocks. That is not my main income. My trading account will only talk about my main source of income and all the direct expenses incurred to earn that income. Right? Now, because I said at foundation level, we are talking from the trading per se. For a trading company, what do you think will be a direct income? Selling of goods? What will be your direct expenses? Purchase of goods? Only purchase? Transportation, maybe from the place from your buying to here. Maybe some guys to unload, pack, other part of it, right? So these are my direct expenses. So my direct income minus direct expenses is my trading account. Trading account, what we get is the gross profit of the company. In a trading account, what we get is in the profit and loss account, what I do from the direct profits, what I have, I will try to accommodate for indirect income and indirect expenses. So my profit and loss account talks about what? Indirect income and indirect expenses. Are you clear till here? Right? From the direct profits, that is the gross profit, if I reduce the indirect expense and add the indirect income, what I get net is my profit of the business. Right? Because this is the profit which will be available to the shareholders or the investors or the owners of the company. Done? So now we will try to go a little bit more in depth about what is a trading account, what's a P&L account, but clear with the overall structure. Do you remember all of this that we had spoken about? A lot of CA Foundation students miss this out and they struggle when they are doing their auditing in the final. Because now you are focused on getting your answer right, not getting your concept. Later you will be wondering about it. I suggest you guys, it's okay even if it gets boring. We'll again retouch on it. We learned so many concepts in chapter 2. There are few concepts which are really required for you guys to know. Concept number 1, business transactions are only going to be reflected in my financial statements. Which concept? Business entity concept. Only which transactions? So any transactions which do not belong to the business has to be taken as part of capital or drawing. Any transactions which do not belong to the business, that means any personal transactions of the owner, has to be removed off from the books. Clear with the first one? Second classification, difference between capital and revenue. I had asked you guys to revise it on Saturday. Oh, you were not there Saturday. You broke your hand. No. Saturday only you broke. Oh, yo. She's looking at you. Yeah. So capital and revenue. I told you guys capital items are the ones which is appear in balance sheet. Revenue items will appear in the P&L account. That is what I'm looking at, right? The third item is our materiality. What does materiality say? Any changes which is going to impact the decision making has to be shown in the financial statements. Now, boss, what do you mean by showing in financial statements? Remember this, notes to accounts are part of financial statements. What is part of financial statements? What is notes to accounts? We have already covered it in one of the chapters. What is notes to accounts? It is the explanation of the items in the balance sheet. Notes to accounts is what? Explanation of the items in the balance sheet. So when I say materiality has to be disclosed, it is not that you have to write everything in your balance sheet and P&L. You can also write it in the notes to accounts. Fourth one, my profit and loss account. Listen to it. Profit and loss account. Extremely important rule. Profit and loss account should only reflect the current year transactions. Profit and loss account should only reflect the... Okay, I'll give you some examples. Try to look into it. I took a place on rent. Okay. April 1st, my owner said, Arjun, I don't believe you. What if you run away? I want a minimum commitment of 18 months. I want a minimum commitment of what? I said, okay, sir, I'll give you. He said, you don't look like a guy whom I can trust. I said, sir, what's wrong with me? He said, I can't trust you. The only way I'll give you the place is pay me 18 months rent in advance. Let's assume 10,000 rupees per month rent. For 18 months, how much it will be? 1,80,000. My profit and loss account will only show the rent for the year. How much did I pay? But what will my profit and loss account show? Only 10,000 into 12, 1,20,000. What will happen to the 60,000? We'll talk about it later. My profit and loss account should only show the current year transactions only. Clear with this example? Let me try to look at the other example. Found somebody like Veda, she trusted, okay, he will give rent. First 9 months I gave rent properly. No problem at all, I gave her rent. 10th month onwards, Veda next month. Veda next month. Veda next month. Like this year passed by. I have already paid rent of 90,000. Belonging for how many years? 9 months. For how many months? How many months I did not pay? 3 months. Now, my current year transactions should reflect whether I pay or not. Whether I pay or not. Which concept is this? Accrual concept. What does accrual concept say? Record transactions irrespective of whether the cash is paid or not. Therefore, my rent still will be 1,20,000 only. This is what is very, very important. Lot of foundation students struggle because they don't understand this concept. Four concepts we thought right now. Clear with the first four? What is the first one? Only the business transactions, capital and revenue. Capital comes in the balance sheet, revenue comes in P&L. Then the third one, you have to make sure all the material information is disclosed. This will not be tested now. Material information and all, you'll learn it in your intermediate and final. Fourth one,
Yes, we'll start.
okay. Guys, are you clear till here? Online folks, are you guys clear till here? Right? Let's go to the next one. What are the key points that we are learning from the matching concept? All the income of a particular year has to be matched with the expenses to earn that revenue. Now, let's read these points slowly so that we get our concept right. All expenses to the revenue earned must be charged to the expenses for the same period, even if it is that rent example of Veda, what I told you. Whether I pay or not, that is not my criteria for income statement. My criteria for income statement is what? Whether it is incurred or not. Clear? What are the examples? Outstanding expense. Opening stocks are included in the P&L. Carry forward future related expenses. The second example which I told you. I have already paid a rent for 18 months. But what belongs to the current year is only.
Yes, today 2 o'clock exam. Tomorrow onwards it will be 6 o'clock. Yeah, you will have time 6 to 8, 2 hours. Evening, not morning. Yes.
Just one second.